right now.
Tenneco has agreed to be acquired by affiliates of Apollo Global Management in a $1.6 billion deal to take the auto parts supplier private. Tenneco shares surging today. Tenneco up now by 93.2%. Lots of earnings after the bell today. Among the companies scheduled to report include eBay, down now by 0.5%. NetApp Inc. down 1.5%. Booking Holdings lower now by 1.4%. And Hertz Global Holdings lower by 2.9%. Recapping, sell-off underway. S&P down 53, down 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Kriti Gupta. Now, as we watch the situation over in Ukraine, there's one other front to keep an eye on, and that is the cyber attacks intended to create chaos and undermine the Ukrainian government. That story from Jeff Stone, cybersecurity editor at Bloomberg News. He joins Kriti and myself here in our Bloomberg Interactive Brokers studio. How are you?
Busy. How are you? Thank you for having me.
Well, it's good to have you here. You are busy. Anything and all things Ukraine right now. What's going on here?
It changes by the day, right? You alluded to this, but we have seen a number of attacks that are intended to create chaos, create confusion, create difficulty for Ukrainian government websites trying to stay online. And it's really tough for banks to stay online.
What does difficulty mean?
They're overwhelmed with inauthentic traffic that appears to be coming from within Russian borders.
And that traffic does what?
Knocks the websites offline. So if you're trying to access your bank, you can't gather your transaction details, for instance. You can't access information from the Ministry of Foreign Affairs, for instance.
That would freak me out.
Yeah.
That sounds scary. How much further can it really go?
It's hard to say. We haven't been in a situation before where a traditional warfare situation, troops on the ground, if you will, is combined with this kind of stuff that we've seen evolve in cyberspace over the past 5 or 10 years. It can get worse.
Jeff, it does feel like Russia is just chipping away at Ukraine on so many different fronts to really kind of undermine the citizens there.
That's true. I think that's part of the strategy. We're speaking with folks in Ukraine who say essentially that the goal here is to exhaust us. It is to intimidate us. It is to wear us down.
Well, I guess my question here now is, if you do have that kind of exhausting, wearing it down idea, can't they go the other way as well? Can't cyber attacks happen on Russia as well? Is this a means of warfare if you're not seeing those physical troops on the ground?
It absolutely is. We know that the Russian government is particularly advanced and sophisticated with this kind of stuff, but we have seen attacks against them. Not from Ukraine as of yet that we know of, but we've seen cases in the past, certainly from the U.S. U.S. intelligence has affected Russian government activity in cyberspace prior to the last election.
Well, this is kind of interesting, right? As we are watching what some would say are 2-week sanctions imposed by the U.S., that you do wonder, right, what's going on behind the scenes in terms of cyber warfare, right? Which is something that doesn't always get talked about, at least initially.
That's right.
But you do wonder. What, are you hearing stuff on that front in terms of the U.S. specifically and NATO allies?
We haven't heard anything about that yet. I would be surprised if it's not happening. They certainly have the capability to take Russian banks offline, for instance, as we've seen in Ukraine, and affect. They can certainly get into emails and things like that. We haven't seen anything indicating that's happening yet, but it's a harder story.
So how do you protect yourself against this? If I'm a Ukrainian citizen, hypothetically, what do you do to prevent yourself?
I think that candidly, your concerns if you're a Ukrainian citizen right now are not in cyberspace. I think that you want to probably take out cash and make sure that you can access your information, have it handy. But a lot of this stuff is kind of a tit for tat in terms of the geopolitics. We know that the Ukrainian government, for instance, is trying to ease some of this burden so that it's not a thought for people yet.
It's just a... Go ahead.
I was going to say, it's fascinating that you just mentioned that you kind of have to look at your cash right now, because anecdotally, I mean, I have friends who are German or live in Europe and have families in Ukraine, and anecdotally, they've said, well, everyone's pulling their money out of their bank accounts, they're spending it on real estate in Western Europe, and this is what the president of Ukraine was talking about, right? He was saying to President Biden, actually say, tamp down the rhetoric, because you're seeing capital flows exit Ukraine at a pace that you just haven't seen. And I thought, my little market hat on, I was like, oh, they're talking about financial markets. That's not what they're talking about. They're talking about people's savings.
Right.
It's wild.
If I can say one more thing, they also We also are trying to keep this as grounded as possible, as you alluded to, the president saying, because fears or overemphasizing this kind of Russian capability in cyberspace plays into the Kremlin's hands. You don't want to create that panic that you kind of alluded to.
No, it's really smart, right, to be level-headed about this. But at the same time, this is our current world, right? In terms of warfare, we've talked about this, right, over the last really decade or so, if not more, that this is how it is often played or will be increasingly played.
Right.
Well, you're going to be busy. Jeff, thanks for getting up to speed, because this is another side of the story that we just wanted to bring to our audience. Jeff Stone, he's cybersecurity editor at Bloomberg News here in our Interactive Brokers studio. And just a reminder that we are going to hear from the Ukrainian foreign minister, so we'll get what is on their mind in terms of a nation overall and what their citizens are facing right now.
Yeah, and it's wild, just the different fronts and the different ways that it's actually affecting not just Ukraine, not just Russia, but really every country around the world.
Absolutely, and we're obviously keeping a watch on the markets as they bounce around, a little bit more toned down than they were yesterday, but nonetheless, they're down across the board, down more than 1% on both the S&P and the NASDAQ. Back to World and National News, Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. President Biden is adding to the sanctions against Russia. This is on top of those he announced yesterday. The new U.S. penalties target the Russian builder of the Nord Stream 2 pipeline and its corporate executives. These new sanctions are also in response to Vladimir Putin recognizing breakaway territories in Ukraine as independent states. President Biden's Build Back Better plan may be stalled on Capitol Hill, but activists and progressive Democrats are pressuring him to act on his environmental agenda.
They're lobbying the White House to declare a climate emergency. That could allow the president to use executive authority to shut down crude exports, suspend offshore drilling, or redirect funds to clean energy projects. Several members of the Congressional Progressive Caucus are backing a bill that would mandate a national climate emergency. Former President Donald Trump used a similar step to divert defense funds for a border wall. In Washington, I'm Nathan Hager, Bloomberg Radio.
Opening statements started today in Louisville for former officer Brett Hankinson. He's charged with 3 counts of wanton endangerment, accused of shooting into an adjacent apartment while serving a no-knock warrant on the apartment of Breonna Taylor. Taylor was killed during the commotion, but Hankinson is not charged with her death. Assistant Attorney Barbara Wiley.
You will hear that his bullets went through apartment 4 into apartment 3 and nearly hit Cody Etherton as he was walking down the hallway into the dining room of his apartment.
Again, that's Assistant Attorney General Barbara Whaley. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons in our 99.1 newsroom in Washington, D.C. In just a moment, we're going to talk about the most read story on the Bloomberg terminal. It has to do with one of the big Wall Street banks. In the meantime, there's another story by our Jonathan Browning of Bloomberg News about J.P. Morgan Chase. And we've got Crete, Nigeria, alleging that J.P. Morgan Chase ignored, quote, overwhelming evidence of fraud and stark warnings from its own compliance staff as it kicked off a London trial over transfers to a former oil minister accused of corruption.
Yeah, wild story. Nigeria kicking off a 6-week trial over the role of J.P. Morgan in those payments. J.P. Morgan, in return, calling that claim over those transfers to the ex-minister, quote, baseless. To me, I don't want to stretch this too much, but to me, this sounds very similar to the IMDb scandal over at Goldman.
And this is, and I also go back to the Swiss bank accounts. Like, increasingly, there is more and more, like, we want to know, we want greater transparency when it comes to global financial institutions.
And can I just correct myself? I won MDB, not IMDb. Clearly, my head's in the film space.
Exactly. Nicely done. We have been watching a lot of films online. But it's interesting that there is greater oversight. We want transparency with financial institutions in terms of who they are transacting business with, especially when there are, regulations, global laws about what are global banks and who they can transact with.
Yeah, especially in a world where those transactions are far more interconnected. I mean, let's just bring this back to the story of the day. Those geopolitics, the reason these sanctions work is because of how interconnected the global system is. And this is just another example of that.
Right. It's a really good point. And there's no leverage if financial institutions somehow are able to go around this. Right. Let's just put it out there that J.P. Morgan, according to Nigeria, acting negligently in transferring some $875 million between 2011 to 2013 from escrow accounts to Dana Tet, hopefully I'm saying that correctly, who had been convicted of money laundering. This is from the Nigerian lawyers. They put that out there today. They cited an email by JP Morgan's senior country officials saying the matter, quote, had gone right to the top of the firm. So again, this is out in a lawsuit, and you have two sides, so obviously more to come out in that trial. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Peloton. A down day for U.S. equity markets. We begin with a developing story in this headline from the Bloomberg Professional Service. The United States is eyeing a release from the oil reserves as prices rise on those Ukraine-Russia tensions. Right now, we have got West Texas Intermediate crude down 0.1%, 91.85 a barrel. Brent, the global benchmark, down 0.2%, 96.96 a barrel right now on Brent. Again, the U.S. is eyeing a release from the oil reserves as prices rise on Ukraine. Stocks now lower across the board, remaining lower. In fact, lows of the day. Equities down as President Biden expands sanctions against Russia with new penalties hitting the Nord Stream 2 pipeline and its corporate officers. S&P 500 index down now by 1.3%, pushing further into correction territory. The S&P is down 56 at 4248. The Dow lower by 332, down 1%. Nasdaq is down 246, a drop right now of 1.8%. 10-years down 10/30 seconds. 10-year yield 1.97%. Spot gold up 0.5%. 19.07 the ounce on gold. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, this is our most read story on the Bloomberg today, and it has sat there all day. It's another one by our Sri Natarajan, and I guess, I don't know, can we call it a clawback? We'll see what he has to say. Goldman essentially wants your bonus back. So here with who the firm is targeting is Sri. He is finance reporter at Bloomberg News in our Bloomberg Interactive Brokers studio. Is it a clawback? Is it the ultimate clawback?
It definitely is a threat of a clawback. What they're really doing right now is taking steps to confiscate pay from a couple of their departed executives who left to start this banking startup backed by Walmart. It's a small startup. It would be somewhat similar to Goldman's own consumer banking aspirations, which took root 5 or 6 years ago, and these two executives were key to that. But what Goldman is doing here, which is what is rare and unprecedented about that, is they're going after pay that has already vested and been taxed. We've heard a lot of instances where deferred pay gets taken away. You go from Goldman to JP Morgan, Goldman to Morgan Stanley. You don't have a chance of keeping your deferred pay. That's always
But you don't
gone.
have it yet, right?
You don't have it yet. In this case, they have it. I mean, we also cite examples in the story where even the deferred pay is getting pulled from people who are moving to clients and buy-side firms that would typically not be treated that way. But even if you're willing to set that aside for a second and just count that as an aggressive turn of the dial, what they're doing with the vested compensation that's already been delivered to them, that really stands out. And that, to me, and a lot of the people I've spoken with, is really the prime example, perhaps, of Goldman and its CEO sending a message, making it loud and clear to staff who are still at the bank and thinking about jumping ship. It might be very costly to do so.
Well, what's interesting to me, and you say this in your story, you say that this is something that normally happens when it's used for punishment. It's reserved for cases of misconduct, not necessarily new jobs. And we saw this before, not necessarily at JP or at Goldman, but we saw this. You also quote this in your story, an infamous incident with Andrea Orcel. I remember that story, moving over to, I want to say Banco Santander, right? Yeah, the Spanish bank, over from UBS. So this has happened before. It's almost like it's been in the making.
Except that's a little different. That's one level less aggressive because Andrea Orcel, who was running investment banking at UBS at the time, moving to Banco Santander, a Spanish retail lender, what blew up that contract was the fact that his deferred pay was taken away.
Okay.
In this case, they not only took away the deferred pay, but they're also going after pay that has been delivered. That is what makes it a little mind-boggling.
Well, this is interesting because it also speaks to when it's vested, right? These are executives who put in their time, right? And delivered on certain things, right? Can we assume that? And then we're awarded.
Absolutely. I mean, the performance bonus is what all these large Wall Street firms thrive on, and it's awarded at the end of the year. It is supposed to be a pay-for-performance culture. It vests over 3 years, and you're restricted from selling it for 5 years. But those are all steps put in place to make sure no one's making a quick buck so that the stock's going up in the short term, and then you cash out and the stock tanks, which is why these measures are in place. But you're using some of those restrictions to now find a backdoor into clawing back that pay.
Sri, it sounds like Goldman's getting incredibly aggressive with a lot of stuff. What's going on here?
It's the broader backdrop. We have been speaking about for the last 2 years, through the pandemic really, about this intense battle for talent. What have all the major firms done? In a period of record revenues and profits, we saw for when it came to their 2021 pay cycle, all of them increased their compensation. They boosted pay. Bonuses were raining down, and the bonuses were going up to a level that you hadn't seen since the financial crisis, and in some places to a new record. That is one side of how you deal with a talent war. The other uglier side, I guess, is also trying to send a message to those who are leaving that there is only one top dog in town and you don't want to get on the wrong side.
Well, what's interesting to me is that this also follows, like you said, this compensation has been increasing for a while, right? And it's also eating into their bottom line. So you kind of understand in a way why they're making this decision. It's getting very costly.
Yes and no, I would say, because remember the firm that coined the phrase, or at least made the phrase popular, long-term greedy? That is Goldman Sachs. Its former leader, Gus Levy, in the 1960s when he was leading the firm, till his dying day, he was the CEO of Goldman Sachs. He ran that place. And that is when this whole idea of you have to be long-term greedy took root. And over the last 50, 60 years, that has been a firm that's been closely associated with Goldman Sachs. So the question is, some of these measures, which are likely to irk clients, and we point out a couple of instances in the story where it has irked clients or has led to some awkward conversations, does that eat into this long-term greedy ethos? In a time of record capital markets, record deal-making activity, massive trading activity, you may not necessarily see it in the numbers, and the Goldman Sachs brand has been built over 150 years. Nothing's going to shake the foundation if 2, 3, 4, 5 clients are upset, but you have to wonder what long-term impact it does have if the trend continues, and really, is that the best way to boost loyalty and association with the firm?
Well, and I do think bottom line, it is about the bottom line, right? Goldman concerned about, preserving the revenues, the relationships, right? Because when some of these big top earners and deal makers go, that certainly impacts them.
Yes, but they've also done a fabulous job over several decades of cultivating what is the corporate world's most powerful alumni network. When these successful rainmakers leave 200 West Street, Goldman's headquarters in New York, and take up a lucrative second career, they will come back to Goldman for advice, deals, trades. That is really a connective tissue for a lifetime of shared riches.
Yeah, and you always feel like Goldman's really, really good at that. We're going to watch and see if other Wall Street firms follow. Shri, fantastic story. Shri Natarajan, finance reporter at Bloomberg News. It is our most read story on the Bloomberg today. All right, February is Black History Month. Every day this month, we are celebrating significant moments in U.S. Black history. Now with your installment for February 23rd, here is Bloomberg's Renita Young.
On this day in Black history in 1979, Frank E. Peterson Jr. is named the first Black general in the U.S. Marine Corps. He was determined to serve his country despite racial discrimination. Peterson first attempted to join the U.S. Navy, but was asked to take the entrance exam over because administrators believed he had cheated. In 1950, Peterson enlisted in the Navy, and 2 years later, as a Marine, he completed flight school and was commissioned as a second lieutenant. Peterson went on to become the Marines' first Black aviator and served as commanding general for the Marine Corps Combat Development Command. Throughout his career, Peterson received several military awards, among them the Navy Distinguished Service Medal, Defense Superior Service Medal, and the Purple Heart. So in 1988, Peterson retired as lieutenant general after serving as special assistant to the chief of staff. That's today in Black history. I'm Renita Young, Bloomberg Radio.
All right, in just a few minutes, we're going to head over to our TV teams to talk about the markets. Right now, stocks pretty much hovering near their lows. We're down almost 2% on the NASDAQ, and we're looking at about a 1.4% decline on the S&P 500. Bloomberg Business Week, Carol Masser, along with Preeti Gupta on this Wednesday. This is Bloomberg.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And this is the countdown to the close. Just 60 minutes left in the trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our partners in crime, colleagues Carol Massa, Kriti Gupta, as we welcome across TV, radio, YouTube, a day where once again we're near lows of the session, Carol, on a drip effect. More sanctions, more tension.
Yeah, absolutely. Continuing to weigh on the overall market. I've been kind of keying in on the retailers. TJ Maxx, Ross Stores, under pressure, kind of dragging down the overall S&P Retail Select Index, and that after disappointment, Kriti, about some of their results.
You know, and what's interesting is that even on a down day, you would think with all the geopolitical risk, you would start to see a little bit of that haven bid going into tech, and yet they're the ones that are actually leading that decline.
Yeah, where is your safety today? It's not in bonds either. It's currently not in stocks, off by 1.4% on the S&P 500, almost 60 points lower on the day is currently where we stand on the S&P. But big tech, once again, feeling the pain. This is what drags your benchmarks lower, off by 1.9%, 252 points to the downside for the NASDAQ. The Dow Jones also off by more than a percentage point now as we speak. And Russell 2000, the small caps, not finding any love. We're off by 1.07%. That's 21 points lower, Taylor.
I feel a little bit like a broken record. Energy, again, the only sector in the green for the year and the only sector in the green for the day as well, as you're really getting, I mean, Brent earlier this morning touching a 99 handle. So energy stocks, of course, are up about 0.6%. And Romain, of course, this is sort of the story of the year, this rotation out of technology into value. Technology there at the bottom of the screen, you're off 2%, and discretionary as well, that sort of risk-taking behavior that is off the table. It's off almost 3%.
Yeah, I mean, there's so much talk about the S&P hitting correction. We're now potentially talking about a NASDAQ potentially getting into bear market territory, down 17% from that all-time high. 85 of the NASDAQ 100 stocks, we should point out, since that all-time high, are down by 10% or more. So this is broad-based sell-off you're seeing. And you're seeing it again today here with Amazon lower by about 2.8% here. We should point out most of the big cap tech stocks are lower here on the day, including Apple, Microsoft, Tesla, NVIDIA, Visa, Comcast, Alphabet, you name it. One of the few bright spots is in the energy space. You're seeing Diamondback Energy, the original FANG, by the way, up 1.5% on the day. That was on the back of their earnings, which are actually pretty good. And more importantly, the idea that they talked about discipline and not necessarily going back out there and drilling more. Remember, this is a big pioneer in the shale space here, and even they're saying, even with $100 oil here, they're holding back a little bit. We're going to talk a little bit later about TJX companies and some of the inflationary pressures they're dealing with, some of the supply chain issues they're dealing with, and then right there at the bottom of your screen, one of the few Russian stocks that actually trades here in the U.S. Yandex, a big internet company, ride-hailing service, down 12%.
And meanwhile, I like the way that you talked about the breadth of the selling, Romain. I'm going to talk about the lack of breadth in the buying and where we are from a technical level. This is sort of a great chart that was being brought up by Oppenheimer, the technical analyst over there, Ari Wold, talking about how at the moment only about a third of stocks on the New York Stock Exchange are above their 200-day moving average. You go back a year, 85%. For our radio audience, we're looking at a chart, 85% were above their 200-day moving average. On a day where we see only 78 of the S&P 500 players climbing, we are having broad-based selling. There is no breadth in your buying, and it's still not quite that buying opportunity, Carol.
Yeah, and you know, Caroline, you do wonder how much of that has to do with the companies reporting. We've got fewer companies that are actually beating earnings expectations. I know, Romain, you wanted to say something.
Well, I was just saying, what was the percentage that you said there, Caroline, on that?
Currently 36%.
36%, wow. Okay.
Yeah. So there's a lot of volatility. You do wonder about kind of the outlook that we're getting from global CEOs. Speaking of global CEOs, there's so much on their plate. And Caroline, you had a great interview with the CEO and chairman of Macy's. We're talking about Jeff Gennette. And you guys, as always, it feels like supply chain comes up. And he did seem to indicate that maybe things are getting a little bit better. Check it out, everybody.
When you look at kind of fresh receipts, which is the lifeblood of a retailer, about 60% of what we brought in last week were shipments that were intended for the month of February. That is a big change from where we were over the past year. So it is getting better. But I will tell you that we're not through the supply chain issues. They will continue into 22 and into, we believe, in the beginning of 23.
All right, and of course, that's Jeff Gennette of Macy's, the CEO and chairman. I mean, Caroline, what did you take away from your conversation with him? Because this is such an iconic brand, plays to a lot of American consumers out there shopping.
Yeah, he talks so much about the various headwinds. He's still talking about the tailwinds that they've got, the fact that we've got a strong fundamental economy, a strong consumer, but the headwinds are still there. Supply chain not ending really anytime soon. Also, of course, the overall inflationary pressure that he still sees. But the area of bright spot that really stuck out to me, labor. He actually said, look, the labor issues that we had are kind of past tense. We've now got the right sort of talent. We're able to bring them in. I wonder how many businesses can say that at the moment.
You know, it's fascinating that you bring up labor in kind of a conclusion, or I should say in coinciding with some of those supply chain issues, because to your point, this is something the Biden administration has been very, very strong about, saying the supply chain issues are going to kind of last for longer, but the labor side of it, that's going to kind of ease as we start to see some of these pandemic restrictions kind of ebb and flow. And as we start to see those Omicron cases drop, you are actually seeing some improvement in the labor market.
Interesting. I'm laughing a little bit because didn't we hear from the B of A report that consumers were willing to still spend on clothes and goods, but it was just like the grocery prices that we were getting a little bit uncomfortable with?
Yeah, I guess. I mean, no, look, I mean, it's kind of interesting. You go from sort of one headwind to another, and I think you have to kind of loop this back to, I guess, the geopolitical fallout from Ukraine. I mean, there's been a lot of talk here about whether markets should be down on something like this. I mean, when you look at sort of past military conflicts that the U.S. has been involved with, the Gulf War, the Iraq War, the 9/11 attacks, you know, there was a significant drawdown in the markets, at least in the short term. Over the long term, though, things tended to right-size themselves. But again, we're right now, as we speak, we are moving back towards the lows of the day here, and a lot of people are concerned about those ripple effects. You talk about inflation. Well, what's inflation going to mean if oil prices goes above $100 a barrel? Wheat prices continue to move higher. Soybeans at a 9-year high. These are real issues here.
Well, and it's certainly real issues if you're over in Europe who are feeling it firsthand. They have been already, and you do wonder how much of this, you know, ultimately impacts that economy and what it means for their global growth going forward. I mean, we've already been talking about recession, right? We've been talking about it in the U.S. and we've already seen it, Caroline, over in Europe.
But what's so interesting as we worry about inflation is actually how the market is pulling back on its rate hike expectations. Here in the Fed, we're now seeing, 6 rate hikes being priced in over the course of the year. The ECB, they're now seeing that the market, the swaps market, sees maybe a rate hike only in October. Previously, it was September. And Taylor, I'm kind of confused there for what the bond market is trying to tell us at the moment. Is the bond market not getting a bid right now because of we anticipate the Fed to raise rates, or is it not a haven trade? I'm trying to work out what the auction tells us and what yields tell us.
Yeah, certainly we've had some good auctions as of late, and I think a flat yield curve at just 37 basis points on the 2s, 10s. You're only a little bit away from getting sort of nearer to that inversion, but it certainly seems to be, Carol, this repricing on the front end of 5 basis points now to a 160. What is that telling you about what that market is expecting?
It does feel like both the fixed income market and the equity market trying to find what are their floors and ceilings in terms of how they settle in on levels. And it's really hard, certainly with this conflict going on. All right, folks, that's going to do it for now. We'll be back in less than an hour's time for our cross-platform coverage on TV, radio, and YouTube. Our Beyond the Bell coverage will take you through today's market close.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, obviously, you're listening to Bloomberg Radio. Kriti Gupta, Carol Massar, and our TV team talking about some of the things. I'm always amazed, Kriti, that when we have this conversation, not amazed, but it's just, you know, what if this, like there's so many questions out there. And I am a belief that there's a lot of recalibrations going on, whether it's our move to EVs and figuring out how climate change impacts and what we have to change because of that. What are supply chains going forward? What's real demand going forward? You know, and I think it's very tricky for the Fed to really play out its policy as a result of all those questions.
Yeah, and then add on these geopolitical tensions, which, by the way, it's really hard to kind of roadmap this because sure, we've been here before, right? 2008, Russia with Georgia, 2014, Russia with Crimea. But in both of those instances, you didn't see actual disruptions in commodities and food prices and things like that. You saw the markets freak out, but to Romaine's point, you didn't actually see those long-term effects really change, and this time that could change.
I mean, I care more about like when we hear from the CEO of Macy's, what they're seeing in terms of supply chain. Like, I want to know what do supply chains get back to normal?
Yeah.
You know, student of economics, like I understand the supply demand. And there is a point where I won't buy things because they're too expensive, right? Yeah. I think that happens. And how does that help supply chains correct themselves? And as we all kind of get back to normal.
Yeah, the demand destruction piece is a very key piece of the equation. For me, my metric is at what point do I go from a $5 cup of coffee to a $6 cup of coffee?
You're crazy. I get it free upstairs.
I should do that.
All right, let's get back to world and national news. Off to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. More sanctions against Russian interests today from the Biden administration. The State Department's Ned Price says the U.S. is joining Germany in imposing sanctions against the Nord Stream 2 pipeline, specifically against the Russian company constructing the pipeline and its executives.
The fact that we are acting in unison immediately to take these steps that essentially remove Nord Stream 2 from the equation, that is a byproduct, that is a result of the work that we have done together.
The State Department's Ned Price, some 40 members of Congress of both parties are back from the Munich Security Conference, and Speaker Nancy Pelosi describes unity of purpose in support of Ukrainian resistance to the Russian invasion.
The Speaker said Congress is ready to provide more aid to Ukraine and its neighbors.
It's stunning to see a tyrant roll into a country. So the people of Ukraine know that we are with them in terms of meeting their needs with gratitude for the defense that the people of Ukraine are making for democracy.
Pelosi said the Western allies are in agreement on the pace of rolling out economic sanctions that would cripple the Russian economy and impact on Vladimir Putin, whom she called possibly the richest man in the world. In Washington, Irv Chapman, Bloomberg Radio.
U.S. health officials say some people getting Pfizer or Moderna vaccines should consider waiting up to 8 weeks between the first and second doses, not the 3 or 4 weeks previously recommended. New research shows that a longer interval can provide more enduring protection against the coronavirus. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week on this Wednesday. Carol Masser, Kriti Gupta in for Tim Stanovic. He'll be back later on in the week. In the meantime, this is popping up among the most read on the Bloomberg. And right now, Kriti knows that she covers the markets inside and out and is just following all of the things that people are writing and tracking different metrics. And we're trying to figure out kind of what happens from here. And this is a story that's about hedge funds. U.S. hedge funds have been slashing positions in technology stocks, started 2022 more tilted toward cheaper shares than at any other time in over a decade. And this is according to Goldman Sachs.
Yeah, and this is absolutely a waiting story, right? Because this was one of the fears going into actually the beginning of 2021, the idea that if you are going to tilt your portfolio towards value, well, those value stocks aren't actually the ones that have the biggest weighting in the economy. If you pull out of tech, you are essentially bearish on the S&P 500, just given how big these companies have gotten. And that, of course, is something that you're seeing right now. You can have companies piling into energy, for example, and it won't be enough to bolster the entire stock market.
That's a great point. Well, this report, Ben Snyder writing this in a note to clients over at Goldman, filings show hedge funds positioning for a different equity market environment than the one that has characterized most of the last several years. Funds with $2.6 trillion of gross equity holdings have reduced positions in more expensive growth sectors in favor of energy and financials, according to the note.
And we all know that these hedge funds are the ones that have a little bit more money. At the beginning, it was actually retail that continued to buy and buy and buy. But at the end of the day, that hedge fund selling outweighed the buying that was even happening on the retail sphere. And you can see the result. This is a major sell-off, the likes that we haven't seen, I think, going back to March of 2020.
Which is why you look at some individual tech names, a lot of them have either had a 10% correction or even have moved into bear market territory, right?
Yeah, and what's also interesting to me is that, Carol, you always ask me, why does this matter to our listeners? Well, here's why. Well, because, think about it. A lot of these retirement accounts are actually exposed to ETFs that are exposed to the benchmark, not the individual stocks.
And you do wonder how this will ultimately, the move away from FANG, right? And it will kind of weigh on them.
Exactly.
Longer term. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. Stocks are low and moving lower. Let's head right over to the First Word breaking news desk for today's afternoon call. Here is Bill Maloney.
And good afternoon, Charlie. U.S. stocks under pressure again today amid increased Ukraine worries. Dow's currently down 400 points. S&P's dropped 65. NASDAQ is lower by 282. The U.S. 10-year yield at 1.97%. Gold is up 8. Oil is trading lower. And Bitcoin is down by 1%. Among the main 11 S&P sectors, only energy was in the green. And leaders to the upside in the Dow, Chevron and J&J, while Cisco, Home Depot, and Apple led to the downside. In other news, wheat hit a 9-year high. JP Morgan said oil prices will average $110 a barrel in the second quarter. And Axios reported that LinkedIn is launching its own podcast network. Wrapping things up, eBay reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. Really appreciate it. Hey, listen, one of the stories that really has certainly resonated with me, and I think it does with Creedy too, we've been talking about a lot of stuff off air, is about what's going on with technology stocks specifically and the slump that we've seen at them. Writing about it today is Bloomberg News equities reporter Ryan Vlastelica. He is on the phone from Chicago. And I love the headline, Ryan, FOMO may lift mega cap stocks when the market turns. I mean, there's a point where someone, right, investors are going to say, wait a minute, these are still strong businesses and they're on sale.
Yeah, absolutely. Good afternoon, everybody.
Hi.
So Morgan Stanley recently released its quarterly analysis of fund ownership data. And amid all the selling that we've seen in technology stocks, the data show that major names, including Apple, Microsoft, Amazon, Alphabet, and Meta, are all under-owned relative to their weight in the S&P 500 and all these major institutional funds. That's a positive signal, according to Morgan Stanley, because it does suggest that these names are under-owned, they've been maybe a little bit abandoned. Like you said, these are also names that have just so many fans out on Wall Street. They continue to grow at a really steady pace. And while valuations might be a little bit stretched compared with some of their historical averages, it's not nearly as extreme as some of the other parts of the market.
Ryan, talk to us a little bit about what people are actually watching when it comes to the tech universe. What is the signal that people go in to buy? Is it just looking for what's a cheap value on Apple or Microsoft, or are they exploring other parts of the tech universe, biotech, cybersecurity, semiconductors? What's your take?
Well, I have heard people talk about both cybersecurity, especially given the rise in geopolitical tensions. This is an area that is expected to get just a lot of spending from companies basically in every sector as they look to make their businesses as secure as possible. The semiconductor area, as always, remains an area of intense interest. Chips are used in basically everything, and amid the supply chain issue, this is just an area that continues to see very strong demand and somewhat lower supply right now. So, again, we have valuations that might be a little bit elevated compared with historical averages, but these are areas that are very strong. As far as what people are looking for, one thing I continue to hear is free cash flow. That is the primary metric that people are looking for. People want profitable companies. They don't want names that are hemorrhaging a lot of cash right now.
Well, and I do think, we've talked so much about the sector being under pressure because of the concerns about higher interest rates. And I guess I get some of that, because of what it means for future earnings. But nonetheless, if these companies ultimately do have strong future earnings, they have strong future earnings. And there's value there.
Yes. I think the tricky thing is that some of these names got very extended, and some of the bets that were being made were a lot more speculative in nature now. I mean, expecting that a name like Microsoft is going to have strong earnings growth over the next few years, that's not as, not the same kind of bet as you might see for some of these more speculative or software names that trade at really low valuations, and maybe they have an attractive business model or something like that they will also face they will face competition, and they have all these other issues out there that can also will have to be factored in at some point.
Right. And we apologize a little bit to our listeners because I know the sound is kind of rough. We're living in a world of cell phones. And Ryan, maybe you can come kind of closer to your cell phone. Ryan, how do you kind of make sense out of what you are writing? And then we had a story that Kriti and I talked about for some of our audience about a Goldman report out there showing how U.S. hedge funds have been slashing positions in tech stocks and started 2022 more tilted toward cheaper shares than any other time in over a decade. I mean, there's just so many different cross currents right now in the market. How do you kind of square those two things, what you write about and then this other story about what Goldman is seeing when it comes to hedge funds on tech specifically?
I've certainly seen that trend a lot. According to Bank of America, allocation to tech is at its lowest since 2006, which is really just a remarkable turnaround because it did seem like for years tech was really the place to be. It was everyone's favorite sector for growth. It was everyone's favorite sector for revenue and market share growth and all these other kinds of factors. So right now there does seem to be a very well-known rotation out of growth names and into value. And while there are some tech names that would qualify as value, the weakness has been pretty widespread in the sector.
Ryan, you mentioned free cash flow just a second ago, and that's really interesting to me because since we've seen kind of this pandemic take place, you've seen a lot of these tech companies really accumulate a lot of cash, not just because more people are spending, but because they've been able to issue a lot of debt. Talk to us a little bit about how that squares with some of perhaps the acquisitions that they're making.
Well, we certainly have seen a pickup in the space as far as acquisitions go, especially with Microsoft, notably with its plan to buy Activision. These major names, we can talk about valuations all stuff as much as we want, but they are just sitting on these huge cash piles, and that is expected to be a way for them to make acquisitions as they see fit. And one thing I have heard from strategists and portfolio managers is that as prices continue to fall, it does make valuations more appealing for names that want to get in there and buy something that they can hold for the long term.
All right. Well, an interesting read, and you certainly do. Some of the folks that you cite in your story talk about investors, having the means and opportunity to buy tech when they want to come into it. So I guess maybe are waiting for things to calm down, and we'll certainly kind of keep an eye on for that trend. Ryan, thank you so much. Ryan Vestelka, he is Bloomberg News equities reporter, joining us on the phone from Chicago. And we've got just about 35 minutes left in today's trading session, and we've been pretty much down across the board, and we're just hovering near our lows, down about 1.6% on the S&P 500. Dow, a decline of 1.2%. NASDAQ really taking it on the chin, down 2.2%. Carol Massar, Kriti Gupta, this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week on this Wednesday, and keeping an eye on the markets for you. And coming up, Creed, we've got your chart of the day. A little tease? Got a tease?
A little chart of the day is going to be on the biggest topic in today's news cycle. That's my tease.
That's a nice one. All right, I'm going to stay here then for that. But first up, let's check in with Charlie Pellet, get another update on that trading day. And Charlie, we're almost getting ready to wrap up today's day.
I want to try to guess the chart of the day. I'm thinking Ukraine, Russia, oil. Those are some of the big stories.
Don't give it away.
Well, see, you shouldn't have confirmed it, Creedy. But here's what's going on. The Dow, the S&P, NASDAQ, all on the minus side right now, at or near session lows right now. 28 minutes to go until that closing bell clangs away on Wall Street. Equities lower. President Biden expanding sanctions against Russia. New penalties hitting the Nord Stream 2 pipeline and its corporate officers. Right now, we have got the S&P 500 index down 1.51%. Yeah, I know, don't go decimal, but that is where we stand right now. We are in correction territory. Tech stocks selling off amid rising tensions. Also a cyber attack on several Ukraine government and bank websites. The Dow down 390, a drop right now of 1.2%. NASDAQ down 282, a drop right now of 2.1%. 10-years down 13.30 seconds, 10-year yield 1.98%, and we have got spot gold up 0.4%, 19.06 the ounce. Equities lower. As for the overall market backdrop, Aaron Brown is portfolio manager at PIMCO.
I think over the next couple of weeks, we're still going to be in a volatile period. So really timing the bottom is difficult. But I think when you step away and look at the fundamentals, the fundamental picture for equities is still quite strong. And I think, I've been somewhat heartened to see that the markets are not panicking. And when you look outside of equities, if you look at credit spreads, if you look at inflation swaps, if you look at 2s, 10s, they're still telling you that the fundamental picture for equities is still okay.
Indeed, we do have the 10-year yield at 1.98% right now. Crude, a major story today. 91.92 a barrel on WTI. Sources tell Bloomberg the Biden administration is considering tapping its emergency supply of oil again. Oil stocks are pushing higher today. ExxonMobil, for example, up 0.4%. BP up 0.3%. Chevron up 2.3%. EOG Resources up 0.9%. And Pioneer Natural Resources up by 1.1%. Recapping, S&P down 1.5%, 10-year yield 1.98%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. We do want to get to Creedy's chart of the day. And of course, you can sign up for her chart of the day at kgupta129 at bloomberg.net and check out her Twitter and Instagram feeds. You can find that at Creedy Gupta News. So, Creedy, you put French fries in a headline, and yeah, you got my attention.
I put French fries in a headline, folks. I emailed this out, and my chart of the day's subject line today was that 80 rubles gets you a large French fries over at McDonald's.
Sounds like a lot of rubles.
It's actually not.
Oh,
because
it
an
isn't?
80
Okay.
rubles is actually equivalent to $1. And if you were to
okay.
go to McDonald's right now, here in the United States, large fries are $3.29. Yes, I Googled all the McDonald's price menus, but I want to know what 80 rubles got you. But let me tell you the significance of 80 rubles here. My chart of the day shows the dollar against the ruble, and it's kind of this geopolitical risk metric, essentially, right? If you start to have this Russian risk escalating, naturally the Russian ruble is going to weaken, and that's exactly what you're seeing. But it's weakening in a very special way. It's weakening to a level to 80 rubles, the surprise number here, which is historically significant. Back in 2014, when kind of during the Crimea annexation, you saw the ruble weaken to 80. Once again, it tested that level during the coronavirus pandemic. It tested that level going into the election in 2020. So it consistently bounces off 80, and that's without sanctions. So imagine if there are sanctions or if something happens with oil prices, what could the effect on the ruble be? And if it were to drop or weaken further beyond the 80 level, say for $1 you were to get 90 rubles instead, that would be really significant, not just for the Russian economy, but for anyone that has exposure to emerging markets broadly, because Russia does have a pretty decent kind of foothold in the EM universe.
Well, this is why when we think about, we see the back and forth going on, like you need to think about, all right, what are the things that could ultimately impact the Russian economy that kind of gets everybody to notice and maybe, potentially forces Vladimir Putin's hand to maybe ease right back. And something like this, right? A continuous weakening of their currency would certainly do it.
Yeah, anything that affects their purchasing power, right? I mean, this is something that you're seeing even here in the United States. We talk about this all the time, that inflation is eating into just how much we can spend. That's going to be a similar story when we're talking about Russia, because if your currency isn't worth as much as it was worth, say, a year ago, you're going to be able to spend less and less on top of the fact that you're dealing with sanctions, which means perhaps your bank accounts are frozen, perhaps your job security is more challenging. The economy just kind of crunches a little bit.
Why is that 80 level though? Why is it 80?
There's a few
weird,
reasons,
right? It's interesting that
there's a few reasons. I'm gonna put my trader hat on here. Not that I was a trader, but I've seen them at close range, kind of like zoo animals, and I say that with love, of course. They were my teachers. But what's interesting about kind of currencies when you trade them, sometimes round numbers can be this psychological level. And going back to 2014, intraday it hit that 80 level and then kind of came back, and then it hit it again in 2016. Because of oil prices, because of course Russia's economy is extremely exposed to oil. They get a good chunk of their revenue there. But when oil prices recovered, because the sanctions hit on Russia, the ruble never recovered. So it kind of stuck around the 80 level. It strengthened a little bit, but at the end of the day, it was never able to kind of overcome that. So not only is this chart on the Russian ruble significant in terms of the geopolitical risk, it's also significant in terms of kind of visualizing the impact that sanctions have had.
Hey, in the grand scheme of things, there's a couple of headlines that crossed, and you and I were noting them while we were, before we came back on air. And this has to come from a State Department spokesman, Ned Price, catching up with reporters, and this was just about 10 or 15 minutes ago, and saying a nuclear deal could be days away if issues addressed. We're talking about detailed issues remaining unresolved with Iran specifically. We had an earlier story on the Bloomberg that talked about Iran shifting more oil onto ships in a move to speed exports. Should talks succeed in ending its exclusion from global energy markets, but also this nuclear deal, right, is key to that.
Yeah, it is key to that, because think about what we've been hearing from the Biden administration so strongly, right? We need those gasoline prices to get lower at a time when energy prices are surging. And one of the kind of tug of wars that you're seeing in the oil market right now is, on the one hand, you see those Russian tensions pushing prices higher, but additional supply from Iran could push those prices lower.
Yeah, and about 30 million barrels added to tankers since early December. I mean, this is, as we said, this situation, the geopolitical tensions between Russia, Ukraine, or what Russia is doing in terms of Ukraine, its intentions and its actions, and then with its NATO allies in the United States, it's a reminder that there are a lot of things going on behind the scenes that play into this. It really is, in fact, impacting the world.
Yeah, and we should also know very quickly, another headline, the U.S. eyes release from oil reserves as prices rise on Ukraine. So that's one more tool that they can use.
And certainly to ease some of those energy prices. All right, let's get back to world and national news. Nancy Lyons keeping track of all of that. She's in our D.C. bureau. Hey, Nance.
Hey, Carol. As expected, Ukraine's parliament has voted to declare a state of emergency after Russia recognized two separatist regions as independent. The declaration gives local authorities powers to react to threats and to place curbs on people's movements. Well, the U.S. today also added new sanctions on the Russian company behind the Nord Stream 2 pipeline and its executives. And the State Department's Ned Price says more sanctions are to come if and when Russian President Vladimir Putin orders his troops to move beyond the two separatist pro-Russian regions in the eastern part of the country.
If Putin escalates further, we will escalate further using additional sanctions and export controls, which we've yet to unveil, but are fully prepared to implement with allies and partners across the globe.
Price says the U.S. remains open to diplomacy if Putin is willing to change course. The former British ambassador to the U.S., Sir Peter Westmacott, tells Bloomberg after watching Putin's speech concerning Ukraine, he's not sure anyone knows what the Russian leader is willing to do.
It was kind of incoherent rambling of somebody who was raging rather than somebody who was necessarily calculating in a rational way. But of course, we never quite know what's theatre and what is the real person.
Sir Westmacott says some foreign diplomats believe Putin is not the same guy. Well, a new poll finds little support among Americans for a major U.S. role in the Russia-Ukraine conflict. The AP NORC poll finds just 26% of Americans say the U.S. should have a major role in the conflict, while 20% say the U.S. should not be involved at all. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Creed.
All right, Nancy, thank you so much. Nancy Lyons in our D.C. studio there. And this now is our most read on the Bloomberg in the past 60 minutes. And Kriti, you mentioned it. The U.S. eyeing a release from the oil reserves as prices rise on Ukraine. I will point out that WTI crude, we're definitely off our highs. We're up as much as 2.2% at about 94 a barrel. Right now we're about 91 and change, almost 92 a barrel, just down a hair.
Yeah, what's interesting about this is that, one, the Biden administration has already done this, right? We had this coordinated release in November to deal with surging oil prices, specifically in Europe, that were affecting natural gas prices as well, kind of collaborating with India, with China, Japan, South Korea, basically the major oil-consuming nations of the world. And the consensus was, this is kind of a short-term solution. This doesn't tend to have that sticking power.
Right.
So it's interesting that they're considering this once again.
But, sometimes you got to do a short-term move to get to, while tensions maybe ease, hopefully, cross your fingers.
Right.
And then, some stability comes back to, in this case, certainly the energy, the oil markets. These deliberations that are going on, according to those in the know, follow a White House move, as Kriti said, back in November, and that's when we did see those 50 million barrels of crude release. And so this is something we're watching. The Biden administration, as we said, the headline, considering tapping its emergency supply of oil once again in coordination with allies to counter that surge in prices brought on by Russia's move against Ukraine. Again, according to those in the know, no decision has been made. Quote, robust conversations within the administration are said to be underway, including potential price point triggers and how to coordinate a release from the reserves with other nations. Again, according to those people who asked not to be identified in terms of what's going on. I think, this is what's interesting too. I feel like in a world, certainly through the pandemic, we weren't all on the same page, but it does feel like certainly the U.S. and a lot of its allies are coming together on these tensions over with Russia and Ukraine.
Yeah, and I think, the gas prices is what's crucial here, right? This is the why does it matter to our listeners piece of it, because especially analysts are saying with these surging prices, it could get as high as $4 a gallon. And that's also what, and just from my reading, I've understood is kind of where people say that's when people are going to stop kind of buying gas guzzling cars. They're going to stop taking those road trips. That's what we call demand destruction. And right now, gas prices, $3.54.
I see it when I fill up at the tent.
Yeah.
I just kind of shocked from just 6 months ago or a year ago, certainly, the differences that we are seeing. And that starts to certainly impact Americans in terms of the money that they have in their wallet, and it impacts things. And as you said, this becomes a political thing as well with these midterm elections. All right, we are continuing to watch what is going on in terms of Russia and its moves on Ukraine. We did see President Biden expanding Russian sanctions to Nord Stream 2 and also expanding when it comes to some of the corporate leadership over in Russia, specifically the penalties on top of a package announced just yesterday by the White House after Russian President Vladimir Putin moved to recognize breakaway territories in Ukraine as independent states. That is where we are. We saw a lot of volatility in the markets yesterday, Kriti, and it does feel like still some pressure, but calming down maybe a little bit.
Maybe a little bit, but at the end of the day, it's that factor of uncertainty, right? Golden rule. Markets don't like uncertainty, and there's plenty of it right now.
Yeah, and we continue to hover near our lows of the day when it comes to the equity markets. All right, right now on Bloomberg Radio and TV, we want to welcome our Anne-Marie Horton. She's Bloomberg Washington correspondent. She's sitting down with Ukraine's Foreign Minister, Dmytro Kuleba, and getting to talk about the current situation and the pressures facing Ukraine.
I want to welcome our Bloomberg television, radio, and YouTube audiences in this global simulcast. As Ukraine tensions escalate, President Biden expanded sanctions against Russia with new penalties hitting the Nord Stream 2 pipeline and its corporate officers. Joining me now in an exclusive interview is Dmytro Kuleba, Ukraine's foreign minister. Dmytro, foreign minister, thank you so much for your time today and joining Bloomberg.
My pleasure.
Let's start with those fresh sanctions. You have been pushing for more, for the West to up the volume. Have they done it? Is this enough?
Well, they did the first wave, which is welcome and helpful, but it sends a strong message to Putin, but it still doesn't stop him. So it means we need more sanctions, we need the second wave, and then probably the third wave, until it gets clear to him that he shouldn't make any step further.
But Nord Stream 2 specifically, this is quite significant.
It's a big move, and we welcomed this decision by the German government. The United States contributed to this result. But you know, Ukraine has been calling to put the Nord Stream 2 on hold for years, and no one was listening to us. If these sanctions had been imposed earlier, perhaps we wouldn't be having this situation today.
You tweeted at 3:20 in the morning, hit his economy and cronies, hit more, hit hard, hit now, talking about Putin. For you, what would be enough?
For me, it's clear when Russian soldiers withdraw. This is
what would be enough in terms of the Western sanctions?
Well, again, I mean, there is an elaborated toolkit of sanctions prepared by the United States, Britain, Canada, European Union, and they impose them one wave after another. I know that some severe financial sanctions are still in the pocket, and we believe they have to be imposed in order to stop Putin. And of course, the nuclear option that everyone is talking about is the disconnection from SWIFT. Exactly. I know there are some doubts, but this is a difficult situation, and a situation like this cannot be fixed without making difficult decisions.
So you think they should go as hard as SWIFT, but the blowback will hurt their own economies. Is this something you discuss with foreign leaders? Do you think they're ever going to be prepared to take those repercussions on their own economies themselves?
A war between Russia and Ukraine will inflict much more damage on world politics and world economy, because what is at stake now is the existence of the world order as we know it. Russia doesn't only attack Ukraine. Russia is a permanent member of the United Nations Security Council who bears special responsibility for maintenance of peace and security. It attacks another country. If they succeed, it will be a message to everyone that rules do not work anymore and the world will be thrown in chaos. So it's better to pay now to deter that and to prevent that from happening.
But this is the fourth time President Putin recognizing Donetsk and Luhansk is the fourth time since the breakup of the Soviet Union he has single-handedly, unilaterally redrawn that map. Sanctions, 2014, the poisoning of Sergei and Yulia Skripal, they haven't worked, have they?
No, they did help a lot in 2014 when the economic sanctions were slammed against Russia. That helped to stabilize the situation on the front line in eastern Ukraine, and President Putin realized that his actions come at a cost which he didn't want to bear. But you're absolutely right. Again, if the world had reacted to Russia's previous aggressions against Georgia, in Moldova, in other parts of the world, in a more resolved way, we wouldn't be sitting here now, because it's impunity that feeds Russia, and this is why he finally has to pay for what he's doing.
What about your own economy? A third of Russian gas flows through. Those flows were kept at a pretty minimum this past year. Are you worried that at some point the Kremlin will cut off those flows that your government gets billions of dollars of transit fees in?
Ukraine has always been a reliable transit country for Russian gas to Europe. For political reasons, Russia decided to bypass Ukraine, and this is how Nord Stream 2 and Nord Stream 1 were born. But there is a conviction in Europe that Ukraine must remain the country of a transit for gas. So yes, we make money on it, but Russia makes even more money on selling gas to the European markets.
And they still are, even if Nord Stream 2 doesn't ever come to light. I want to move to the diplomacy of this. You sent a letter to Kiev yesterday saying we should cut off diplomatic ties. Ukraine should cut off diplomatic ties from Russia. Will that happen?
Well, this issue is now under consideration by the president. We have this instrument in our kind of diplomatic toolkit. I firmly believe that we should have done it in 2014 when Russia annexed Ukrainian Crimea and invaded Donbas. This wasn't done. I don't know what else has to happen for the country to break up diplomatic ties with the aggressor. This doesn't mean, though, that we will shut down our consular presence, because we want our consuls to stay in Russia and to continue providing services to our citizens.
But yesterday, standing next to Secretary Blinken, you said Plan A, utilize every tool of diplomacy. Plan B, fight for every inch of land. If you cut off those diplomatic ties, does this mean you're now at Plan B?
No, because cutting diplomatic ties does not mean that you cut off communication entirely. It's just a different mode of maintaining a line of contact and talking with each other. It's a diplomatic gesture, a diplomatic decision, but it doesn't mean that we will not be able to speak with each other.
Ukraine, for the past few weeks, has been trying to play down a full-scale invasion. But now we have a state of emergency in the country. What's changed the assessment?
The movement of Russian forces closer to the border, their movement inside of the occupied territories, closer to the front line, and of course the decision of President Putin to recognize so-called Donetsk and Lugansk republics as independent countries was a game changer, not only for Ukraine, but for global politics as such.
I also want to ask you about cyber. That's something that happened today. Again, more cyber attacks. Your own foreign ministry's website was hacked. This has been going on for years. Banks, the metro, power. In your discussions with Western leaders, you talk about tit for tat with Putin in sanctions. Do they ever talk about potentially hitting Russia with cyber?
No, I think, cyber attack is like nuclear weapon. No one wants to.
But two has happened to you in the past week.
Yeah, that's what Russia did to us, but we did not receive any proposal about hitting Russia with cyber to retaliate Ukraine. And this is not what we're looking for, but we try to build our own cybersecurity, and we're working closely with the United States and also with the European Union to make our own systems stronger.
When President Putin recognized Crimea as a separate state, 24 hours later, he annexed it. Do you expect a similar scenario with Donetsk and Luhansk?
Not within the next 24 hours.
But do you expect that at some point in the near future?
At certain point, the problem with President Putin is that he lives in his own world. He doesn't have checks and balances. He doesn't have free media, civil society, or politicians that would be putting pressure on him or advising him. He may wake up in the morning and decide to do that, but there is little that we will be able to do to convince him not to do it. But as the logic evolves, we see that he pursues military goals rather than political goals. And he needs Donetsk and Lugansk as battlefields, not as an integral part of Russia, at least at this point.
I want to end on something happening in the United States that's getting a lot of attention domestically, which is that former President Trump, as well as some other Republicans, are actually praising President Putin vis-a-vis this conflict. The words were, he's savvy and a genius. What's your response?
Well, it's good that the United States are not neighbors of Russia. Otherwise, no one in the United States would have such an opinion about President Putin.
Dmytro Kuleba, thank you so much for your time, and wish you well on your trip back to Kiev.
Thank you.
Thank you. Back to you guys.
All right, that, of course, was Bloomberg News Washington correspondent Anne-Marie Horton with Ukraine's foreign minister here in our New York City headquarters, and obviously the ongoing situation. It's a difficult position to be in, because obviously, as we heard, the Ukrainian foreign minister, really relying on help from NATO allies in terms of this situation and the pressure to be put on Russia.
Yeah, and really pushing for more sanctions, saying that this isn't a tough enough stance from the Biden administration. It's not unlike the commentary we've heard, not just from political strategists and from other countries, but specifically from investors who were waiting for something tougher. But what's notable to me is this headline where he said, we actually want our consulates to stay in Russia. They are still actively looking for a diplomatic solution.
Yeah, absolutely. And I guess keeping fingers crossed that gets to that point. I thought from our Jody Schneider, our political director here at Bloomberg Radio and Bloomberg TV, saying that, maybe the slow going by President Biden is that there's just so many tools in the toolkit, right? In terms of putting pressure on Russian President Vladimir Putin. And so you wonder if that's why maybe it's slow going. Hey, let's bring in the host of Sound On, Joe Matthew. He joins us from our 99.1 studio in Washington, D.C. Hey, Joe, what stuck out for you in that conversation?
Well, I think to your point, just the hearing him speak directly to the situation in Russia and actually want to continue, some sort of diplomatic relationship, at least until now, has been interesting. Of course, they're in the process of severing ties with Russia. But when he spoke to annexing those breakaway regions, this is a real concern. If they have intelligence or are led to believe, just based on history with Vladimir Putin, that he is next going to annex that part of the country, we're having a very different conversation than the one we're having right now. Legitimizing and annexing are two very different things.
And I thought that was interesting when Anne-Marie was asking, like, he's done it 24 hours later, and then it was like, well, okay, if he doesn't do it then, what if he does it in 48 hours? Like, you do wonder how that escalates the situation.
It would be an entirely different, and that, by the way, is what would bring, the mother lode when it comes to sanctions. That's obviously the leverage that this White House wants to maintain, because they know that more is going to be coming. John Kirby, the spokesman for the Pentagon, was briefing at the same time as that interview was happening, and he was asked about this as well. And he says they have really given up on the idea that this is a bluff, that this is posturing on some grand scale by Vladimir Putin. They believe this is a military operation that is now underway.
Joe, the phrasing here is, for when it comes to sanctions in particular, is that they're coming in tranches. How many tranches can we expect?
Isn't it something when we all get on the same page with vocabulary like this? Like the world community has decided this is a tranche story now. I'm not sure when the second tranche comes. I have to be honest. I spoke a little bit earlier today with an expert on sanctions. Brian O'Toole actually used to run sanctions for the Treasury Department, and has. Yeah, he's going to be on sound on with us a little bit later on, and I'll encourage everyone to listen because, he says this has been, the die's been cast. This is not building the plane in flight. When Jen Psaki says at the press of a button you get the next layer, he said that's actually the case, that enough thought and work has gone into this that they know. How many tranches? I'm not sure what makes the full pie here, Creedy, but I get a sense that there are more than 2 or 3, and that the White House on a daily or maybe every couple day basis just adds another layer, adds another tranche, and this is the world we're in right now.
I hear tranche and I think a financial crisis.
I hear tranche and I think credit markets.
And credit markets.
Here I am with a piece of pie. I guess that's just my own disposition.
All right. Well, looking forward to your show at Sound On.
Yeah, we'll see you in about an hour.
You bet. Joe Matthew, take care. Bloomberg Sound On host Joe Matthew joining us from the Bloomberg 991 studio in Washington, D.C. Folks, just a few minutes left in the trading session. Equities, though, hovering near their lows of this session. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close on this Wednesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are now 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Ray's counting you down to that closing bell, here to help take us beyond the bell. It's our global simulcast partners, Carol Masser and Kriti Gupta in for Tim Stenovic. We welcome in our audiences across Bloomberg Television, Radio, and YouTube. Looking at an S&P 500 at 42.24 right now, around the lows of the day, down almost 2%. And Carol, the NASDAQ indices down about 2.6% right now.
Yeah, staying low here with just a few minutes left in the trading session. Been looking at some of the outperformance. Energy, your best performing sector, but even that, Romaine, has been bouncing around, up 1.8% at its highs, unchanged at its lows, and still holding on to about a 1% gain, Creedy.
Yeah, but at the end of the day, Carol, it's a waiting story, right? If you don't have tech on your side, you do not have the S&P 500 on your side. And right now, your biggest weight contributors, your biggest weights on the S&P 500 are those big tech names at the end of the day.
And the breadth that we talk about that is lacking on the higher side and just doubling down on the lower side, there are only 64 stocks higher on the S&P 500 right now.
I think Sherry had a good point. We just spoke here to our radio audience, Sherry Paul, and maybe we've been doing it wrong. Maybe instead of the rotation out of equities into bonds, it is the rotation within equities. Is this finally the solidification, Romaine, of the value trade? Energy at the top.
Where's the rotation?
What do you mean? Energy is up 18% year to date. Technology is down 17% year to date.
What else you got, Taylor? Is that it?
Oh, is that it?
I'm just supposed to go into
bond yields are up to
Occidental
160,
Petroleum?
the
That's
highest
it?
since
Maybe buy some wheat. Wheat's really going up right now, so maybe that's where you go.
Well, I've been stockpiling the wheat in my bedroom closet. That's soybeans and gold right now. I'm prepared for the apocalypse now. All right, let's bring a little bit of levity here. Of course, we are talking about another down day here for the markets here, a 4-day slide now that we're looking at, as markets all pretty much in correction territory. The Dow Jones Industrial Average down about 459 points here, going to finish the day down about 1.4%. The NASDAQ Composite down about 2.6% or 344 points. The S&P 500, and I think this is interesting here. We're talking about a day where it's down 79 points or about 1.8% here. And we talk about this idea of 90% down days. Now, we kind of just avoided that. About 88% of the stocks in the S&P 500 are finishing lower here on the day. But this is a pretty big drawdown that we're seeing on a lot of these names. Energy, that is your saving grace, up 1%. The Russell 2000, Taylor, is going to finish the day down by about 1.8% here. If you're looking for a rotation into small cap cyclicals, Taylor, you better keep looking.
Yeah, well, take a look at this chart. I'm trying not to make this a habit because we did it yesterday. We're going to do it again. It is that drawdown, and this red really highlights it, Romaine. Yesterday, we were at 10%. Today, we are now down from some of the highs that we had on January 3rd, 12%. Again, the last time that happened was March 2020. So, Caroline, this really highlights the significance of this.
Meanwhile, we do get the idiosyncratic news of individual companies. How strong are they? What consumer growth are we continuing to see? And eBay front and center right now as they see a fourth quarter adjusted earnings per share from continuing operations actually beating expectations. Net revenue coming bang in line with expectations, $2.61 billion. The gross merchandise volume, $20.73 billion. About half of that, $9.7 billion of that coming from the United States, but seeing that international gross volume of some $11 billion. They see, though, less active buyers than had been expected, 147 million versus the market wanted to see 155 million. The question, though, is how many of these are outsized spenders, are more lucrative purchasers, are buying your luxury handbags, are going into NFTs and even the likes of crypto as well. This is a space that eBay wants to get into, but overall they are seeing a beat in the adjusted earnings per share. But we really want to double down as to how much they're going to have these tough comps from within COVID crisis and how much they managed to show growth coming out of it as well as we all start to hopefully get out and start spending in real life.
Yeah, and it'll be interesting to see. I mean, we talk about some of the resiliency that we've seen with regards to consumer spending. And look, so far, the data that we've gotten have proved that out. But we're starting to see a lot more data from private companies start to talk about this idea that, yeah, there are worries out there. There are worries here about the potential of consumers to continue spending, particularly on lower income consumers who don't have the sort of that tailwind of fiscal stimulus. And even some of the higher wealth consumers, the idea is, well, have they bought everything they need? I mean, how many more home renovations, how many more cars can you really buy?
You know, Romaine,
Yes,
you asked me what else I had for you. Pull up this chart.
Let me see it.
I'm going to sock it to you right now. On a year-to-date, well, this is just today, energy, the only sector in the green is up 1% on the day. Everything else on the day, this is sort of a second dive deeper into some of the S&P 500 sectors. Lower, lower, lower. At the bottom of the screen, the auto sector, you're off 6% on the day. The retailing sector, we talked a lot about TJ Maxx, Lowe's, Home Depot, those inflationary pressures, that's off 3%, Romaine.
And you talk about the rotation. I mean, I was teasing you a little bit earlier, but you talk on a year-to-date basis, energy's up 21%, right? Nothing else is in the green right now. The next closest you're going to get are financials. Banks, which I was told were supposed to be doing well in this environment, they're down 2%. And of course, you got those discretionary names, the tech names, 15, 16, 17%.
I'm glad you took us there because I was looking at the year-to-date performance. You're very welcome to. But consumer discretionary, you know, communication services, information technology, they're so beaten down. At some point, do you look at these names and say, okay, this is an oversold situation and we're going to see opportunity. Is this a buying opportunity? There's lots of money certainly sitting on the sidelines to be put to work.
It could be oversold. Nvidia's down 30%, Tesla down 30%, eBay, which you were just talking about, Caroline, that's down 27% as of the close.
You know what's fascinating is when we talk about the energy sector was just a couple of months ago when you saw energy leading the gains in the S&P 500, it was your classic reopening trade, right? And that has transformed into your inflation hedge, which has then transformed into potentially geopolitical risk. What's interesting to me is that energy kind of seems like it's no longer that reopening trade, that risk trade. It's almost a defensive play now.
Lululemon is down 37% from those November highs that we saw on that. Are people not buying tights anymore?
I think one calls them tights anymore.
Are they tights? What are they called?
Nobody calls
Maybe they're buying them on eBay. That could be a
on
question. Let's get to the eBay numbers because I mean, I'm not sure if you want secondhand tights, but you certainly perhaps want collectibles, perhaps you want luxury items. eBay coming out with numbers that overall did beat. We're seeing their adjusted earnings per share forward-looking guidance, though perhaps slightly shy of expectations. Poonam Goyal's with us, senior US retail analyst for Bloomberg Intelligence. Did dig into the numbers. I mean, overall, it looked as though the fourth quarter did come in line with expectations, but push us forward past, as we start to exit COVID lockdowns, whether or not eBay can still sustain the sort of growth and the pivot that they've been making.
Yes, absolutely. I thought the fourth quarter actually was pretty good, except for the active buyers numbers. And here's where we're going to see what they say on the call. They were down 9%, down a little more than expected. But really the key here is how well did the high value buyers do? And that's what we're looking for when they speak on the call. Aside from that, guidance was a little light, but we think that's, a function of tougher comparisons. We're encouraged by the share repurchase authorization and the increase in dividend. Overall, we do think that eBay has room to grow and take rates higher with its promoted listings and payments integration now complete.
You mentioned buyback, eBay boosting its share buyback authorization by an additional $4 billion, so putting that money to work. I mean, are they putting money to work in the right places, Poonam, at this point?
I think so. I mean, buying back their shares, which trade much lower than other tech retailers, and also they're spending money on acquiring companies that can help them authenticate products on their platform. So we saw them do it in sneakers. We saw them do it in 3D technologies. We also saw them, authenticating watches. So there's a lot happening where they're investing to really get the customer to be comfortable in buying some of these aspirational luxury items on eBay and to really compete with other resale platforms.
I'm always curious about eBay because it's massive, yet it's still a laggard in so many ways, of course, to kind of the granddaddies of e-commerce out there when we talk about Amazon and some of the others. And I actually think we lost Poonam there, who has given us some great insights over at Bloomberg Intelligence. We should point out eBay shares are down about 10%. And the question, guys, that I was going to really get to here is the idea of competitiveness here, is particularly in that e-commerce space. We know that Amazon and, of course, now Walmart has sort of muscled their way. There aren't a lot of other options. At least people don't view these other companies as other options out there. And you wonder how that plays to a company like eBay.
Yeah, but also the reals of this world. It's interesting that they have been going into this luxury area, the authentication area, and the collectibles area as well. This is a stock, though, that actually has come down significantly from its highs. You pointed out from its October peak, like many of the tech stocks, it's down some 30%, but not a single sell on this stock. And you're seeing, analysts, 11 buys, 18 holds, not a single sell. I wonder how much has been priced in and why we're seeing this pull down of some 10% after hours.
Well, that's a good thing about priced in, Caroline, in that name, because what is it? It's already down 17, 18% leading into this report, and then add on that 10%. All right, so eBay, we're definitely seeing that under pressure. Let me just get to some of the gainers in today's session.
Were there gainers today? You found some?
I actually found some. Let's hopefully. Lowe's was up 6%, up about 1/4%. So just holding on to it. Sales beat, raising its full year forecast. Overstock, did you check out this one? Because this was a big outperformer. It was up about 23% at its close today. Real reason why, ICE making a strategic investment in T0. I don't know if you saw that. That's the broker-dealer in which Overstock holds an 80% stake.
Got the CEO on a little bit later on Bloomberg Technology. Tune in.
That's going to be an interesting conversation, right, in terms of their holdings. And listen, since we could all use a beer right now, let's see if this one held on to a gain. Yes. Molson
Caroline
Coors
only drinks seltzer.
Who does? Caroline, is that all you drink?
No, I'm a cider girl, but that's by the by.
All right, Molson Coors up about 4.6%, top in the S&P 500, fourth quarter net sales beating estimates. Creedy, what do you got?
Yeah, well, there was no shortage of decliners when you looked at the market today. A lot of red on the screen, but I think we're going to look at some proxies here. We'll start with Apple closing down 2.5%. I really want to use this as that proxy for big tech because we talked about the energy outperformance, but at the end of the day, it really is a weightings game. If you don't have big tech on your side, you are not going to see the S&P 500 rally unless you have a bigger rally in those value stocks. So Apple down 2.5%. Like I said, a proxy for big tech. The other one I want to point out, Carol, you mentioned Lowe's, you mentioned Overstock, but we also got TJ Maxx's parent company out today, closing down 4%. They actually had some good numbers come out, but the problem here was that they said that some of those margin expenses, some of those shipping costs, the freight costs, well, they were going to stick around. They were so worried about that outlook that they actually aren't even providing a year-end EPS view, and that really shook investors. And I'm just going to quickly end here with Moderna, down 6.4%. They all reported earnings tomorrow. Of course, that classic pandemic trade coming to an end.
And let's talk about a classic trade that's currently a risk-off trade. If you're looking at GMM, at global macro movers, we are seeing a significant inflationary push when you're looking at commodities. You saw the Bloomberg Commodity Index at a 7-year high. We're seeing backwardation, team. I know that's a word that Taylor loves, reflecting basically record deliveries 1 year ahead. We're seeing the highest premium being priced in near their highest premium on record deliveries at the moment in commodities a year ahead, because we're seeing money move into commodities. WTI crude up 0.5%. We see that in related to the risk off tone in the FX market, money moving into the Swiss franc, for example, as you search for a haven, and yields down, well, rising across the board, Taylor.
Carol, yields rising, bond price lower. That summarizes the action of today.
All right, that's going to do it for our cross-platform coverage, our market close coverage here on radio, TV, and YouTube. Guys, catch us again, same time, same place tomorrow.
All right, and to all of our audience out there on Bloomberg Television, Radio, and YouTube, we are in a global simulcast here talking about 2 years into this pandemic. And some countries, including here in the U.S., are starting to fully reopen and drop mask mandates. I'm joined right now by Dr. Anthony Fauci and Balance of Power anchor David Weston. David, over to you.
Thank you so much, Romaine. And Dr. Fauci, thank you for joining us. Let me pick up at exactly what Romaine was just talking about. People around the world opening up. We have Great Britain saying we want to live with COVID. Right here in New York City, we have the mayor saying he can't wait to do away with mask mandates, with vaccine mandates. What is the risk we're moving too quickly away from masks and vaccine mandates?
Well, if you look at the current guidelines of the CDC, where they're basing their guidelines on cases alone, as you probably have heard, they will be essentially updating and modifying the metrics for their guidelines. In other words, not just relying on cases, but relying on severity of disease, particularly hospitalizations, as well as hospital capacities in a given location, such as at the county level. If you look at that right now, pulling back on masks is a bit risky. However, if you look at the curve, how sharply it's coming down on a daily basis by a certain percentage each day in both cases and hospitalizations, we are clearly heading in the right direction. The real question that we're all going to pay attention to is that when you pull back on mitigations like masking requirements, be they in indoor places, workplaces, or the schools, what is going to be the reaction of the virus to that? Is it going to continue to go down? Is it going to plateau as opposed to keep going down? Or is it going to rebound? It is somewhat risky, but I believe if we keep going in the right direction with the cases going down, then there will be an epidemiological justification for doing that. But it's just right now, just at that transition zone where the prediction of pulling back might actually be the right thing, given the next iteration of what the CDC will be recommending based on their new metrics, which I think will make the country look on that map of guidelines, look like there's less of a risk in certain areas than was previously thought, according to the prior metrics.
So Dr. Fauci, staying with the CDC guidelines, my understanding is the CDC now is changing their recommendation about the time between the first and second shot in the vaccine up to 8 weeks, apparently because of some concerns about myocarditis. My question to you is, are there data that actually indicate you get a better response, more effective immune response, also by prolonging the time between the first two shots?
David, there is a balance to that, because if you get the first shot and you wait longer for the second shot, you have a risk of not being vaccinated to the full primary component for an additional few weeks. That's a small risk, but a risk. If you wait a bit longer and you're in that younger age group where you actually have a risk, a young man, for example, between 12 and 39 years old, has a small risk of myocarditis that you make even less of a risk when you push out the second dose. But knowing that from prior experience, for example, in England, you may get a better initial response if you give the immune system a couple of more weeks or so to mature in its response. So it's a balance. On the one hand, it could make it a bit better. On the other hand, it can give you vulnerability in those first few weeks following your first dose. So I don't think it's going to be a substantial difference in efficacy by any means, but the CDC made that recommendation because they wanted to make the risk of a very low adverse event, i.e. myocarditis, even lower by extending the time.
Dr. Fauci, there's a lot of talk, of course, about preventing getting COVID. There's also the other side of this, which is for those folks that do actually get COVID, the treatments out there that are available. There was a lot of talk when that Pfizer pill was introduced, Paxlovid, that this could potentially be a game changer. Those were the exact words that we heard from the President of the United States. We're a few weeks into this now. How are we doing with regards to A, availability of that pill, and B, the effectiveness of it in treating COVID?
Well, we're going to have a lot more available as the months go by. Right now, obviously, it's somewhat limited. There's enough out there, certainly, to get the people who would need them at the high risk. Remember, if you look at the data show very clearly that if you are within a high risk group and you get infected, it prevents by about 89% the likelihood that you will progress for the need for hospitalization and ultimately dying. That doesn't mean that everyone who gets infected, particularly when you're dealing with Omicron, when it looks like in general, the risk of hospitalization and death on a case-by-case basis is less. So A, we have a limited amount, but enough to go around for the people who likely need it. And as the months go by, we're going to have even more. There'll be a lot more. There'll be 20 million doses.
How confident are you that that more is also going to be effective against additional variants out there?
Well, you know, if you look at the variants and how they actually evade immunity from the vaccine and evade immunity from the monoclonal antibodies, it's much more difficult from what we've seen so far for those variants to evade the effect of a direct antiviral. It could happen. We've seen the evolution of drug resistance, but given the fact that that antiviral drug acts at a part of the replication cycle that's really a different story than that binding site where the virus binds to the cell, and sometimes when the virus mutates, the antibody is no longer effective, or is the antibodies that are induced by a vaccine. So I think there's less of a chance of that happening, but we know from experience, for example, with anti-flu antivirals, that the more you use them, particularly if you use them over a prolonged period of time, you can get the evolution of resistance, which is the reason why we don't want to stop just what the antivirals we have. They're going to be very, very useful, as you say, in some respects, a game changer. But we want to continue to both discover and develop additional ones so that you have a larger armamentarium available for the people who need them because they're at a greater risk of progression.
And so, Dr. Fauci, when we talk about, I guess, what other options are out there, what other options are available with regards to whether it's vaccinations or other sort of preventative measures here, we're going mask off now, at least in many cities here. We're now starting to see even some of the vaccine mandates start to be dropped here. So what protection, I guess, do we have, can we count on?
Well, one of the things that I think is an important message to get is that particularly when you look in the era of Omicron, that third boost that we're talking about is really something that makes a dramatic difference in reconstituting the waning immunity. You know, the good news is that we have vaccines that are highly, highly effective and quite safe. But the reality is that the protection over time wanes. We see that particularly in a situation where the protection to begin with Omicron is not as good as example against Delta. And it does wane, which is the reason why we tell the people who've been vaccinated to please, when your time comes up, to get that booster shot. we tell the unvaccinated to please get vaccinated. The data are so clear. When you look at hospitalizations and deaths, the curve of the people who've been hospitalized who are unvaccinated, the people who are vaccinated, and the people who are vaccinated and boosted, that the overwhelming percentage of the people who are in hospitalized IC units and die are among the unvaccinated. So we have a very effective tool. So if you combine vaccination and, as you said, the availability of good antivirals, such as Paxlovid, among others, it's not the only one, newer monoclonal antibodies that we will continue to develop, and the wide availability of tests, particularly at home 15-minute tests, I think we are in a much better position right now to deal not only with the ability to pull back on mitigations, but also in case we get, which we very well might, so it's a big caveat, another variant. So very much better prepared right now than we were, example, a year or so ago.
Dr. Fauci, you said the data is there for that third shot, the booster shot in addition to the two. What about for a fourth shot? There's a lot of talk about that. Do we have data that indicates whether that's effective, particularly for the elderly or the more vulnerable, and how much more effective is it to have the fourth shot?
Well, when you have waning immunity, you look now, for example, 4 to 5 months following the third shot of an mRNA, the hospital protection still remains high at around 78%. But it waned a bit because, remember, it was up there at around 90+%. So it's down still at a pretty high level. So that's the reason you've heard me and others say, for the regular person, you really don't need right now a fourth boost, except if you have a severe degree of immunocompromise, such as transplant patients and patients who are on chemotherapy for cancer. That's for the people in one category. For the people who have no underlying conditions, we have to keep an eye out on that 78%. That's good. That's at 4 to 5 months. So on a month-by-month basis, the CDC is following whether that durability of protection against hospitalization stays steady at around the 70s, or if it keeps coming back down. If it comes back down, at some point, you'll have to make a decision. Do you want to give a fourth dose to the most vulnerable? And obviously those would be the elderly, those who have underlying conditions, those who are at a greater risk to get a serious outcome. So really what we're doing, David, is we're monitoring it on a month-by-month basis.
Dr. Fauci, I would like to turn to a slightly personal issue, and that's Dr. Paul Farmer. I know that he was a very close friend of yours. I knew him reasonably well, spent time with him. It does strike me we have lost a towering figure in the healthcare system, and particularly public health system. Reflect for a moment on what his death means and what we could learn from what he did during his time here on Earth that could inform both this pandemic and other things coming up down the road.
Well, Paul, as you're right, was a very dear friend of me and my family, my wife and my children. He's truly a once-in-a-lifetime person for so many reasons. I think people maybe not fully appreciate the total breadth of why he was such a great man. First of all, his passion for equity. He personally not only was an advocate for people in the lower and middle income countries such as Haiti, where he spent a lot of time, and Rwanda and other low and middle income countries. The passion to make equity for health care was extraordinary. But not only was he an advocate for it, he lived it. He went to Haiti and lived there. He has a home in Haiti. He goes out into the wild, as it were, to visit patients in their own home. He was totally beloved by people in Haiti. The same holds true in Rwanda. That's one part of him. Equity, a compassionate physician. But look at the things he did. He built a first-class medical school hospital in Haiti. First class. Everyone said it could not possibly be done, that you could do that in a place like Haiti. He trained Haitian nurses and Haitian physicians so that they could be self-sufficient on their own. He just recently built and is the chancellor of an Institute for Global Health Equity in a rural part of Rwanda. When you think of that, that's totally amazing. And then superimpose upon that a person who had such love for humanity. Everybody who came into contact with him absolutely loved him. Truly an extraordinary man, an irreplaceable loss to the world, to global health, and to the idea and the passion that we should all have for equity. It's just, I mean, it took me a few days to just even be able to talk about it. It was so painful to realize that we no longer have Paul Farmer among us.
And we're sorry for your loss. Frankly, we're sorry for the loss of all of us and Dr. Paul Farmer. Thank you so much to Dr. Anthony Fauci. He's Chief Medical Advisor to President Biden, as well as the Director of the National Institute of Allergy and Infectious Diseases at the National Institute of Health. Back to you.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed. Bloomberg Business Week. Carol Masser and Tim is off today. Kriti Gupta here in his place in our Interactive Brokers studio. Our thanks to David Weston, of course, there with Dr. Anthony Fauci, the nation's top infectious disease doctor. In the meantime, let's not forget that stocks did extend losses as U.S. President Joe Biden expanded sanctions against Russia, new penalties hitting the Nord Stream 2 pipeline and its corporate officers. S&P 500 shedding about 1.8%, pushing further into correction territory. Tech stocks selling off amid the rising tensions and a cyber attack on several Ukraine government and bank websites. Let's get back to the markets. Charlie Massimo, he's Senior VP Financial Advisor over at Wealth Enhancement Group. He is on the phone from Blue Point, New York. Charlie, good to have you back on Bloomberg and here with Kriti and myself. It's been an interesting year, and it's only February 23rd. Are there trends setting in place that you think stay with us longer throughout 2022?
Well, thank you again for having me back.
Sure.
But I think that's a hard question to answer at this point. Certainly, I think if you look at the short term, you can say, well, this trend of volatility will be here for quite some time. But I think from an investor standpoint, as we always say, we need to look past the short term and look a little further out at the horizon and see where we may see some opportunities clearing up, maybe mid to longer term.
Let's talk about the markets here for a second, because I'm really confused. What is going on? There's this huge sell-off. We're pinning it to geopolitical risk. But just a couple months ago, I think the consensus was that the first quarter of 2022 was going to be pretty volatile anyway, of course, attributing that to the Federal Reserve. What is actually driving the market right now?
Well, I think you have so many factors that are driving the market right now. And certainly coming off a year like we did last year, you can expect somewhat of a pullback. But, markets, as you mentioned numerous times, hate uncertainty, and we certainly have a lot of uncertainty now. And a lot of people always ask, well, have we priced this war of Russia with Russia in? And it's so difficult to say, have we, because we don't know what this may end up as. Will it be a ground war? Will it be geopolitical? Or will it be cyber, as we're hearing today? So I think it's very difficult to somewhat predict where the market will go or what the trend currently is. But certainly the short-term driving force right now is the uncertainty with Russia.
So how do you make sense of, we did a couple of stories earlier about hedge funds basically bailing on technology stocks, and at the same time, the significance and kind of FOMO in some of those big tech names, that maybe it's just a matter of time before we start to see institutional money come back into them. How do you look specifically at a name like at some of the big tech names, and do you think it's time to allocate some new money to them?
Well, I certainly think when you look historically, value outperforms tech or growth stocks, and value has underperformed for probably the past decade. So certainly time is on value side. But when also you factor in,
but people have been saying that for a few years, right? Only to get burned.
Well, that is true, but now look at what's happening now. You have inflation rising considerably, And you think about dividends so far outpace value stocks that pay very good dividends, so far outpace consumer price index, or so far outpace inflation. It's really important, especially if you're near the point of retirement, that it's more about purchasing power preservation than it is capital preservation. And really the only place that will keep up with inflation or surpass it is value type of dividend paying stocks. So I certainly think there's a number of factors that will add to the column of value versus growth. And again, historically, we've always seen in rising interest rate environment, tech seems to stall out or even lose ground. So I tend to think and am in the camp that value will outperform growth, probably for the foreseeable future as interest rates kind of stay low, although they're rising, but as inflation continues to rise.
What's interesting is you pinned it to rising interest rates, but I also want to point out very quickly that you are actually seeing that. This was a call in 2021, and perhaps this will come into fruition in 2022, Carol.
Yeah, certainly something that we need to think about. Charlie, we got to run. Thank you so much. Charlie Massimo, he's Senior Vice President, also Financial Advisor at Wealth Enhancement Group, joining us on the phone from Blue Point, New York. All right, you are listening to Bloomberg Business Week. I'm Carol Massar along with Kriti Gupta, and this is Bloomberg Radio. All right, Charlie Pellet. We've been talking markets. What do you got for us?
I got a losing day on Wall Street. Steep losses for the Dow, the S&P, and NASDAQ. S&P down 1.8% today, pushing further into the red, further into correction territory as tech stocks sold off amid the rising tensions between the Ukraine and Russia. Also, a cyber attack on several Ukraine government and bank websites. Treasuries extended losses. The dollar little changed. Today, we had the 10-year 1.99% on the yield right now. 10-year down 15/30 seconds. The Dow dropped another 464 points, down 1.4%. S&P down 79, a drop of 1.8%. NASDAQ down 344, down by 2.6% for the NASDAQ Composite Index. Year-to-date, NASDAQ is now down by 16.6%. Spot gold up 0.5%, 1908 the ounce, while West Texas Intermediate crude up 0.2%, 92.08 for a barrel of WTI. eBay shares tumbling after hours after the company forecast adjusted EPS from continuing operations for the first quarter that missed the average analyst estimate. Poonam Goyal follows retail with Bloomberg Intelligence. She is awaiting the eBay conference call. She spoke with us right here on Bloomberg Business Week.
Yeah, I thought the fourth quarter actually was pretty good, except for the active buyers numbers. And here's where we're going to see what they say on the call. They were down 9%, down a little more than expected. But really the key here is how well did the high-value buyers do? And that's what we're looking for when they speak on the call. Aside from that, guidance was a little light, but we think that's, a function of tougher comparisons. We're encouraged by the share repurchase authorization and the increase in dividend.
And again, if we have any headlines in that conference call, we will pass them along to you. Right now, eBay shares are down by 8.22% after hours. Booking Holdings down 1.8% after the online travel company reported revenue for the fourth quarter that beat the average analyst estimate. Booking, by the way, is the parent company of Priceline. Hertz out with total revenue for the fourth quarter that met the average analyst estimate. Hertz shares driving lower by 2.6% after hours. As I mentioned, a down day on Wall Street. The Dow, the S&P, NASDAQ all declining. Stocks extending losses as President Biden expands sanctions against Russia with new penalties hitting the Nord Stream 2 pipeline and its corporate officers. Recapping, 10-year yield 1.99%. S&P down again today, dropping another 79 points, down 1.8%. And that's a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. So this is another one of the most read stories on the Bloomberg today. It's about the solar startup CEO whose pay is so big, Kriti, it just might eclipse that of some other well-known and well-compensated heads of companies. And we know, we cover this at Bloomberg, right? There's been some CEOs who've done really, really well in the past year.
Yeah, Carol, I just have one question for you. What would you do with $37 million?
I would be on my private island somewhere. And as much as I love you all, but I would be...
Is that how much islands go for? $36 million, and then it's just a little bit of extra on the top?
I just need a little island, All right, let's get to it, because it is a must-read. Bloomberg Wealth Team reporter is with us, Scott Carpenter. He's here in our Bloomberg Interactive Brokers studio. All right, Scott, great story. We're all reading it. So what's the company and who is the CEO and how much money are we talking about?
Thanks so much. It's great to be here. The company is Heliogen. It was founded in 2013, and it's a solar startup that is planning to create heat by concentrating the sun's energy on a small spot. And the company says that it can get temperature up to 1,000 degrees, which would be higher than before. And it's paying its CEO $37 million, which is more than what Goldman Sachs paid its CEO last year. That's the value of the pay that Heliogen gave him last year. It's actually less than that right now because the stock price has gone down since then.
But it comes with I'm just looking at your story here. It comes with a catch, right? Walk us through that.
It comes with a big catch. It's mainly composed of options, and because the value of the shares right now is less than the strike price of the options, he actually could not exercise those options. They also vest over 4 years. So the idea of this is to give Gross a long-term incentive to build value for the company. And I think the company knows that this is a risky concept. This has the technology here has a patchy track record. So they're trying to give their CEO a lot of motivation to go big, to make this work where in the past it has been spotty.
I mean, this was a $16 stock at the end of last year, so it has taken a major haircut.
Right, yeah. It started trading after it merged with a SPAC at the end of last year, and it went up to $16, and now it's down to $4. Of course, a lot of that decline has been because there's been a sell-off in the SPAC market. So investors have not yet delivered a conclusive verdict on whether this technology is going to work. We'll see in the long run. And according to this latest pay package, the one that was worth $37 million last year, those options vest over 4 years. So it's going to be some time before before Gross can decide whether those options are really worth much. But
can we just clarify? It's not the Bill Gross formerly of PIMCO fame. It's a different Bill Gross, just to lay it out there.
Yes, thank you. Good clarification. This is Bill T. Gross, whereas the bond investor, the famous one, is Bill H. Gross.
There's a difference.
There is always a middle initial.
There is.
But Bill Gross aside, there are some big name backers here. I'm looking at Bill Gates. Walk us through that connection.
Yeah, absolutely. Well, Bill Gates, it's not too surprising. He has been investing in a lot of technology that has promised to do something about climate change. So yeah, he's a big investor. Another investor is actually Patrick Soon-Shiong. These are investors that have traditionally invested in emerging technology, things with big promise, but that don't necessarily have a tremendous track record right now. But they're things that could pay off big time in the future and could mean a lot for the world of clean energy.
Got to say, this is actually an energy that my husband and I have talked about, like harnessing the sun, right, to help in terms of our energy needs. So do we know anything about the trajectory, the time frame in terms of understanding whether or not this is really viable and it's going to work? Because if it does work, you could see this company just take off like a moonshot.
Right. I think it's difficult to say on the timeline. The company's still very young. It hasn't said a whole lot. It has said that it's starting a partnership with the mining company.
Connection lost.
It has a partnership with them. Where I think and investors are waiting to see whether there's anything to this. Because in the past, there has been a lot of hype about this technology, and people believed that it was the next big thing, and it was a way to harness the sun's power. And it didn't quite work out. So this time around, what Heliogen says is has new technology. It's using smaller mirrors in order to avoid some of the problems that afflicted the technology in the past. And so, yeah, it's still too early to say, but hopefully we'll be able to know a timeline soon.
Feels like something the Avengers could figure out. I'm just going to put it out there. It's interesting, though, looking at the FA function on the Bloomberg. I mean, they definitely have seen, or they're predicted to see, tremendous revenue growth year over year by the time we get to the end of this year. But again, time will tell if it all works out. Interesting read. I said it was among the most read. It's a fun read. Bloomberg Wealth Team reporter Scott Carpenter joining us here in our studio. Scott, thank you. All right, let's get back to world and national news. Nancy Lyons, take it away.
Thanks, Carol. President Biden is expanding sanctions against Russia with new U.S. penalties today, hitting the builder of the Nord Stream 2 pipeline and its corporate leadership. That's on top of the penalties announced yesterday when Russian President Vladimir Putin moved to recognize breakaway territories in Ukraine as independent states. But even though the U.S. is ramping up the pressure on Putin, Ukraine's Foreign Minister Dmytro Kuleba tells Bloomberg more severe sanctions are needed, even if they're costly to the NATO allies.
A war between Russia and Ukraine will inflict much more damage on world politics and world economy, because what is at stake now is the existence of the world order as we know it.
Ukraine's Foreign Minister Dmytro Kuleba tells Bloomberg President Putin has been able to live for too long without checks and balances. Well, it's now looking like a large-scale invasion is imminent, with the State Department's Ned Price expressing real concerns about what Russia might do.
A large-scale invasion, an assault on urban centers, the human rights abuses, the potential war crimes, the atrocities that we have great concern could take place.
The State Department's Ned Price says the U.S. is ready to engage in diplomacy in order to save lives. Two leading prosecutors investigating former President Trump's business dealings are stepping down. The New York Times reports prosecutors Kerry Dunn and Mark Pomerantz resigned abruptly today from the team after Manhattan DA Alvin Bragg reportedly expressed doubts about moving forward with the case. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, along with Kriti Gupta, our Bloomberg Markets correspondent, here in our Interactive Broker studio, right here on Bloomberg Business Week on Bloomberg Radio. Remember when you talked about 80, was it rubles buying French fries? So what do you think 90,000 pounds or 122,000 US will buy you?
A whole lot of fries.
But a very small apartment in London.
Right. Can you tell I'm hungry, Carol?
We all are at this time of the day. So a London apartment with only 75 square feet, 7 square meters of living space, just bought at auction for 90,000 pounds, 122,000 US, an 80% increase from its initially planned starting price of 50,000 pounds. It's small.
Can I just mention, not to be a little bit of a European snob here, but I love London. I love it, love it, love it.
I love London too.
It's located in East London, which isn't even the most expensive part of London.
I heard Caroline and the team talking about it over on the TV side, and she's obviously British, and yeah, it's not a great area.
It's not exactly, which is like, why? But, you know,
but it's London, and like in
London.
any great city, like we've seen this in New York. Remember, there used to be neighborhoods. I went to school, college in the city, and there were areas you would not go that are now pretty hot areas.
Yeah, well, East London, just historically, from my very surface level knowledge of it, it's near Canary Wharf, which is the financial center of London.
Right.
And so it's supposed to be this kind of up and coming neighborhood, the FIDI essentially of London. What's interesting to me is this markup, an 80% increase in a city that's already fairly expensive in the property sector.
Talking about inflation. All right, but we got to get to the specs. The apartment features a bunk bed over shelves. It's like a dorm room, drawers, and a microwave. There's also a tiny, quotation marks for those of you on YouTube, wet room with a shower, toilet, and sink.
We should mention the bed is on top of the microwave, just to be clear.
Come on, it all works, right? Even before the auction began, the starting bid for the micro flat was bumped up to about $102,000 due to high demand. The current tenant pays almost $1,100 a month in rent and uses it as a crash pad a couple nights a week. That is small.
I want to know where he actually lives.
God. All right, you're listening to Bloomberg Business Week on Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the bell. Hertz Global Holdings posted fourth quarter profit that beat expectations despite ongoing sluggishness in corporate travel during the COVID-19 pandemic. The car rental company posted earnings of 91 cents a share, excluding some items, surpassing the average estimate of 76 from analysts compiled by Bloomberg. eBay is warning investors that first quarter sales will miss estimates as shoppers return to pre-pandemic spending habits. It was a down day on Wall Street with the Dow, the S&P, and NASDAQ extending losses. S&P moving deeper into correction territory, down another 79 points today, down 1.8%. The Dow down 464, down 1.4%. NASDAQ down 344, down 2.6%. 10-year yield 1.99%. Spot gold up 0.5%, 19.07 the ounce. West Texas Intermediate crude oil up 0.4%, 92.24 barrel on WTI. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet there with an update on today's top business stories and the markets. Well, as we await the heightening geopolitical tensions as a result of Russia's moves on Ukraine, let's not forget that people actually live there, and they are trying to figure out whether to stay, to flee. Their future definitely can be, at this kind of time, feel very much up in the air. Our next guest has nearly 300 employees in Ukraine, and he is joining us with what he is seeing and what they are doing. We welcome Andy Kurtzik. He's founder and CEO of Just Answer. It's a site that connects people with doctors, lawyers, vets, mechanics, all kinds of experts 24/7. He is with us on the phone from San Francisco. Andy, nice to have you here with Creedy and myself. How are you, and how's your team doing who are on the ground in Ukraine?
It's nice to speak with you as well. It's a terrible situation in Ukraine. Our team is suffering. The people of Ukraine are suffering, and it's a very difficult time right now.
So what are you doing to prepare? Walk us through that process.
We've been in Ukraine since 2010, and that was when Yanukovych was president. Basically, Putin controlled Yanukovych. We were there while it was under Russia's control. We were there during the Maidan Revolution in 2014, which was another trying time, and then we've been there since then with Russia invading Crimea and fighting on the east, and so we've had some time to prepare. We've been able to put together lots of plans that we are now implementing to keep our folks safe and to keep our operations as stable as possible.
So you mentioned it's obviously a difficult situation for your employees. I'd love to go back there, and can you drill down a little bit for us in terms of specifically what your team members in Ukraine are dealing with at this point?
Of course. So Putin is obviously bullying Ukraine and is a master of propaganda and misinformation, and so the kinds of things that he's doing to our folks on the ground is that you probably saw the bombing of the kindergarten about a week ago, and since then he and his folks have been calling in bomb threats at schools all over Ukraine, including our employees' kids' schools, and with that actually happening, right, that's a real threat. And everybody has to drop everything and run to school and pick up their kids. And this has happened multiple times in the last couple of weeks.
So give us some
as an example.
Give us some numbers, maybe a little bit of a time horizon on. I guess it's just so rare to have someone actively kind of works out some of these logistics when it comes to their employees. What kind of time horizon are you kind of preparing for? Are you forecasting for? What does it look like on the ground?
Well, so what we've been able to do over the years is put together a large document with essentially DEFCON level 1, 2, 3, 4, 5, and at each step, all the actions that we're going to take to keep our employees safe and to keep our operations as intact as possible. And so, for example, one of the things that we're actively doing right now at the threat level where we are is moving our employees from the east of Ukraine to the west of Ukraine. And we've given them multiple options. We're putting them up in hotels. We're helping them rent apartments. We're giving them paid time off to make those moves and to pack things up. and that's actively happening now as one example.
So I'm also curious, in terms of the situation that your employees are dealing with. One of the stories we talked about earlier, Andy, is the cyber attacks that are happening. And we've reported that Ukrainian government agencies and banks were hit by what's called a DDoS. I don't know if I'm saying it correctly, but it's a distributed denial of service attack, right? And a lot of this is to really kind of chip away at the sense of security among the Ukrainian people. What signs are you folks specifically seeing of that?
Absolutely. We call those DDoS attacks.
DDoS, forgive me.
And no problem. And yes, one of our bank in Ukraine was one of the banks that they took down with the DDoS attack a week ago. And how does that affect us and our employees? Well, one of the things we need to do is we need to protect them and make sure we can pay them on time. And so if Russia were to continue to do that, we need alternative ways to pay our employees because they got to pay for groceries and pay the rent and do whatever they need to do in order to live. And so that's the kind of thing that we worry about. The other thing, and so we've got all kinds of plans for that. We've got money that we've put in a bank in Poland. We're thinking about even using crypto if the hryvnia starts to devalue in a major way and becomes less useful. Lots of different alternatives there. So the other things we need to worry about, and very likely, and have already been happening, frankly, are Putin taking out communication systems, Putin taking out power systems. And so, on the power system side, we're getting diesel backup generators for our 2 offices there so that people can have access to that. For communications, every time the internet goes down, and they are doing DDoS attacks on different ISPs, can you imagine how that feels to live in Ukraine? Because that's one of the first steps, right? The minute war starts, Putin's going to take out your communications. And so if you're sitting there at home and all of a sudden your internet goes out, you think war started. Can you imagine that feeling of constantly sort of any moment your country's going to be invaded by Russia? And so we've got to do all kinds of things to combat that. We're getting satellite phones. We're getting multiple different ISPs. So that if one goes down, we've got another one. We're using all kinds of different chat communication methods in case one goes down. We have access to others. So these are the kinds of things we're dealing with.
Yeah, anecdotally, I've heard that a lot, and maybe you can correct me if I'm wrong, but anecdotally, I've heard that a lot of people have been trying to move their funds, their savings out of Ukraine when it comes to, essentially their life savings, pulling it out of bank accounts, investing in real estate in Western Europe. You mentioned operating through a bank in Poland or even crypto. Are those the kind of things you're thinking about as well?
Well, we're a U.S.-based company. We're based in Silicon Valley, so most of our assets are here, and we don't have to worry about that. We send money over in order to pay them, and then we pay them, and then there's just reserves left in the bank account until the next time we need to pay them. So that's not an issue for us as much, but we got to make sure we can pay them.
Hey, Andy, just got about 20 seconds left here. Do you ultimately anticipate you might need to pull these people, if they want to, completely out of Ukraine, depending on how this plays out?
I sure hope not, but that is an option for sure. Depending on how this plays out, we need to keep our employees safe, and we're going to do whatever it takes to keep them safe. And I just want to end with one quick thought, which is, I don't think it will come to that, and we're certainly planning for the worst, but we're hoping for the best. And our intention is to stay in Ukraine. We are committed to Ukraine, and in fact, we're going to try to grow in Ukraine.
All right, going to leave it on that note. Andy, thank you so much. I know this is a tough situation. I know you've got your plate full, certainly taking care of your folks on the ground in Ukraine. Andy Kurtzik, he's founder and chief executive officer of Just Answer, on the phone in San Francisco. Sound on with Joe Matthew coming up. Joe, what's on tap? Just quickly.
We'll be talking with Daniel Fried to start off, former ambassador to Poland, former assistant secretary of state for Europe. We'll get to the bottom of the new sanctions announced today.
Gosh, great lineup. All right, Sound on with Joe Matthew coming your way in just a moment. A reminder, we pretty much ended on the equity side of things near our lows. Kriti Gupta, thank you.
Thank
See you tomorrow.
This was fun.
All right, it was fun. Have a safe evening, everybody. This is Bloomberg.